Welcome to this week's episode 137 of the Lumber Word. We're recording it on the 3rd, 12:15 p.m. Thanks for showing up, guys. Pretty interesting market this week.
That's a nice way of putting it.
I mean, I'm trying to think about this. Let's go through the cash real quick. I said last week it was a $5 market. You give somebody a quote and you don't call them. They're taking it from their friend at $5. I mean, mills are kind of all over the place. Who wants to start? Charles, you and I were talking before we got on. What's the pine market going? Is it on fire? In what direction?
It is on fire. It's just a house fire. That's all. It's a house fire.
It's like it's firewood's selling for more than Dimension Lumber, right?
Pretty damn close. Pretty damn close, especially as it gets closer to winter. I mean, it's
like, based on last week's print Friday. Where do you think the real numbers are trading?
Minus, depending on the item, anywhere from -20 and -45.
Okay, and so if I'm doing my back of the envelope, Charles, is that
Greg?
Is that below timber cost?
It's well below, considering most break evens. I mean, most break evens all in are anywhere from 320 and 345. So I mean, they're getting smoked.
What percentage of yellow pine log gets turned into economy or number 3 or a fall down?
Probably. I don't know. I don't know what kind of mill y'all are running because we haven't had that discussion if you're trying to compare notes. So I can't really give you an accurate estimation outside of some old antique stuff.
I can tell you that like
on average,
inland mills.
Matt, I say that in jest, right? I was trying to be a smart ass.
Okay.
Anywhere from probably 15 to 25%.
Okay, so that's double.
No, it's probably. Let me back it. It's probably 10 to 15%. Yeah.
Okay, so that's sort of in line with like what a coastal hemlock log would produce, but it's more than what spruce or inland mills are going to produce for low grade because they just have a nicer log. So for all those listening that don't understand mill economics, if 15% of your log is going to be turned into a piece of lumber that starts with a 1 or a 2 in front of it on the price, it really drops your sales average quite a bit. If you're selling $400 lumber FOB mill, but 15% of your lumber averages
$400 lumber.
I'm just giving an example here. This is a hypothetical.
Western US.
This is a hypothetical. Let's say your on-graded lumbers, all your premiums, all your high grades, all your mid grades are going to average 400 FOB the mill for the month. And then you put in 15% of your production selling for $200 FOB the mill for the month. These are best case scenario numbers. You just dropped your sales average by like, $40 a thousand, $50 a thousand. So the math is pretty bleak if you're selling your on-grade stuff for $250, your premium stuff for $300, and your low-grade stuff for $1 something. I mean, there's no escaping that math. It's terrible.
So here's the thing that I'm like, I guess I'm going to say I'm struggling with. First, I want to apologize to all of our listeners. We had a conversation a couple of weeks ago about where September was going to expire. And, I was a bit of an outlier when I said 585, and I want to apologize. I meant 485.
I want to apologize for saying 640 to 650. Holy cow, what was I thinking?
I mean, so, when I look at the Eastern market, Ash, I look at, a handful of people, and I say less than a handful of people selling lumber every day, finding what the market prices are. And then I look at another group of people that are $50 to $100 over that price, selling in the Canadian market, arguably building inventory because they're not that market can't buy enough lumber to take all for all the takeaway. And then I have a few other people that are just they're not selling anything. I did have a couple of conversations today with one mill in particular that said, yeah, well, we're going to have to do something because we're running out of space at our mill. Not sold anything in 7 weeks. I had you know, in other conversation, you know, with the mill that, you know, basically said it's like, you know, we're days away from making an announcement to curtail. I'm like, well, you know, I go, yeah, that sucks. I'm sorry. But, you know, I had a conversation. This guy said, hey, if they took off 1 billion board feet, would that matter?
Yes.
Over the next 2 weeks, you had announced curtailments.
2 weeks.
Over the next 2 weeks, 2 to 3 weeks, we get a steady announcement of $1 billion of curtailments. Will that matter?
Oh yeah.
Really?
It will eventually. Yeah. It will eventually, but not for the next 2 or 3 weeks. It depends upon what the announcement is. I mean, if they're not going to take, you still got a pile you got to deal with right now.
If you took 500 million board feet out of the West and 500 million board feet out of yellow pine, that would have an effect.
Well, I think Western U.S. is the least likely place to get curtailment. I mean, I'm surprised that Southern U.S. isn't doing something given the economics, Charles. I mean, I just...
Charles is on mute.
You're on mute, Charles.
Sorry.
We cannot hear you, brother. We cannot hear you.
I don't think anybody in the South is... Matt called me before we hopped on the pod, and we were talking about, you know, values of cars, right? And how some of these cars are shipping upside down anywhere from $15,000 to $25,000. So if you take 4 trucks, it's called $20,000. I don't think anybody in the Southern Yellow Pine business is losing $5,000 a truck. Hate to say it. So we're not really in the same position. We're not. I mean, I think you've seen a lot of curtailments that needed to happen based on antiquated equipment, efficiencies, etc. But my point to what y'all were saying is while I was on mute, and I apologize, but is you look at what happened last year and everybody started announcing early September as far as what was going to be curtailed in the South. I think GP, Canfor, and Interfor were some of the big names that announced that this time last year. Well, the market didn't feel that until about November-ish, and then for a 3-week spurt, and then it kind of went like this until Q1, and then we had tariff talks. So I stand on that. I don't think if you pulled 1 billion board foot off of the market right now between the time of clearing green chains and kilns and log inventory and some of the other stuff they got on the ground, we wouldn't feel that until February next year. 100%. I'm very confident in that.
So if you look at what comes across monthly from Canada, I mean, shipments are dropping monthly, right? So
how much did they ship over the previous 60 days anticipating price appreciation because of the new tariff or 80 CVD, right? I mean, I think you got to look at it from a 90-day window to understand what chess game they're playing and what their desired outcome was. Their desired outcome was they'd pick up 20%, 30% on wood that was already across the border. And of course, now they're not getting those numbers and it's still sitting there. So they're not
we've got a guy that kind of sends us the monthly shipments. I'm going to guess that, you know, if I compare that to a year ago, the numbers are the same or less because we had a similar situation last year.
Yeah.
So I think the numbers probably will be lower. Here's where the big drop's going to come. And I'm saying a big drop. We're probably already at a run rate of down 30 or 40% on Euro shipments to the US. And I will say that, you know, between now and the end of the year, that's going to drop to probably 50 or 60%. Only people are going to be shipping are people that have contracts. You know, I say we have programs with 4 different suppliers right now. 2 are not shipping at all. One just gave me like 50% of the volume that we were getting, and I had to guarantee prices that I think we're going to have a hard time making money on, Ash. But
so there's a hard no.
We did it because, like, you know, we got a long-term relationship, right? I mean,
did you really?
Yeah, I just said, you know, with 50% of, it's like 50% of the volume that we used to get, right? So it's not a lot of lumber.
Hey Ash, real quick, Rob Rob can't log on, so he's wondering if there's a phone number he could call to take part in the discussion. Our guest, Rob Cross from FC Stone.
I don't have a phone number, I don't think.
Yeah.
He may just be trying to log on the hard way. I mean, there's an easy way. You don't have to set anything up. You just log in through the regular.
Click on the link and join as a guest.
Or he can do it through his cell phone if his business computer is locking him up.
I'll tell him to use his cell phone.
Yeah.
Hey, one thing I to draw a correlation here. If you look at the past 3 years or three and a half years, Euro spruce at the port was an issue for 6 months. And then last year we were in the very similar situation with spruce as we are now, as far as too much wood in a reload. So that's 3 years in a row that the supply chain that is involved in SPF has created a situation that it's oversupplied based on demand. So the supply pull environment that we're in is a lot worse than I think we think it is. And that compounds my conviction on a billion board foot off the market. I don't think it does anything until Q1.
Just got an email of a curtailment, guys. I got an Eastern mill that just announced that they're closing for 3 weeks on Friday. No more room in the yard.
Big mill or little mill?
So Matt, what are the Pacific Northwest mills doing? I didn't see Coastal Hemfer print down very much.
You're not going to see any relief coming. You're talking curtailment structures. Who's most likely to curtail? It's not going to be U.S. Western mills. I think Green Doug Fir Mills might be losing a little bit of money right now, but maybe not to the point where the Canadians are or where the Yellow Pine guys are. And so that's where I look. I mean, I'm not trying to point fingers here because, you could say, oh, I'm just representing Hampton's interests. Well, no, we have Canadian production. We're eating it too. And so, but I mean, if you just look at the math, the mills that are most likely to take some downtime for financial reasons only would be the yellow pine, some of the higher costed yellow pine, more inefficient mills, the older mills. And then your, basically all of your Canadian mills that are paying this current 35% average weighted combined duty. I mean, it's a lot of money.
But didn't we shut those inefficient mills down in the South this time last year? Wasn't that the
I don't know,
dude.
You're the expert. Why don't you just tell us? Don't ask me.
I think we already played that card, I guess is my point.
So look I don't think the industry did itself a favor. I mean, if you would have been, all right, I'm going to pat all of ourselves on the back a little. If you would have been listening to our podcast for the last 5 months, 6 months, even when we were up in Montreal, and Greg probably screamed this the loudest. It's like the CVD and AD is meaningless, and 230, and everybody was screaming about 232. They were up until 2-3 days ago. So everybody lathered up, and they added like 5x what they thought would be. Otherwise, they were not going to be able to produce lumber. And some people bought a little bit extra. We ran up to $700, and then the musical chair game just stopped. And everybody's like, "Why aren't people paying us $700?" Because that's what our CVD and AD is. It's like, well, markets don't work that way. So we're in a free fall basically in lumber prices. They generally sell off a lot harder than they should and last a lot longer. So, I mean, where are we at in this inning right now? I mean, we EFP'd stuff last week. We EFP'd stuff today. That was some of the.
So let's tell people, Ashley. I mean, like we've been, I feel like if somebody's listening to us, it's like it's a lot of buzzkill right now. I mean, I was getting my little knife out and was thinking of slitting my wrist after listening to you guys. But here you want to make some money. Here's what you do. You buy September, you sell November, $50, $55, $60. You call up your broker and you EFP with a big Western mill, and you take 2x6 and 2x10, or even those 2x4 tallies that you looked at, Ash.
Yeah, like
great value. You're going to be getting lumber into the market today at probably $30 to $40 below, today's quote unquote market price. You're also getting the book probably, what was that? About 125 times.
But Greg's giving away our complete playbook here right now.
$3,000 or $4,000 futures profits. So like the guy up, like the account goes, oh, you did really great with that futures. But this is what you're going to put on the shelf, and you're not going to want to sell this until Q1 of next year. You factor in your interest costs. You already got $50 or $60 in the roll to November. You're going to be able to roll January at the same thing. This is for Mike W. Ash. I just figured I'd let him know that ahead of time. And I mean, this is a playbook to be in a managed risk position and make money.
Yeah, yours is a little different. I'm doing the buy September, sell January for $90. We don't get those very often.
I mean, I think you can get more. But I'm greedy.
I'll take 90 when the average
scale
is
up.
40.
You're gonna get 90. You're gonna get 100. You take 120, right?
Yeah, and the markets let you.
I'll take safer money
to
rather than riskier money, and I think what you're describing is safer money, right?
Well, no, like we had the
conversation. Good options, Matt.
We had the conversation this morning. Do we hedge this or just get spec long? And it's like, why would you not hedge it if you've got that kind of basis? And then we went through all the charts, looked at the overvalued, undervalued, and the hedge charts, and it just, I mean, most people won't take our advice on this anyway. So in this, it's not advice. This is just a recommendation.
And I want to let everybody know
I sign off. This is advice.
I want to let everybody know we've already done the trade a fair amount of times.
Yeah, I'm talking about past history here, not things that I'm gonna do. I already did it.
Yeah.
So
I gotta do it.
No. We did some last week. We might do more next week, maybe.
Hold on, Charles. What?
I said, why don't we change the subject and talk about Bill Belichick and his performance at UNC last
Well,
year?
it was almost as bad as lumber futures.
That young.
It was bad.
I mean, his head was not in the game. You know where his head was, right?
Yeah, his head hadn't been in the game for a while.
He needs to get on the Ashley Beckholt workout plan because that gut is not going to fix itself. Holy cow! Made me feel skinny again.
Let's talk about. I had a kid.
Hey, Ashley, did we like go offline yet, or we like not doing that this week?
No, we'll wait till next week. Next week we'll do this live halfway through, and then we'll go offline.
Because I figure I gave away all the best stuff there already, right?
So Charles, you were talking about supply push. Greg always talks about it. I mean, what does the demand look like? You got some of these home builders out now putting stuff on their website so investors can have a better opportunity, smaller investors to buy and rent back. I mean, with the price of houses now and home builders now soliciting renters or small, medium, large people to buy homes and rent them back to people, where are we going here with housing? And how is that going to affect the lumber prices? Or is it even going to affect the lumber prices? Anybody? Bueller?
I'll let somebody older than me answer that question.
I thought you were talking to Charles. I thought you were asking.
No, Matt. Matt, I mentioned it. I put an email out to you guys with that link of that one company that's got a website now for investors to look at deals.
Yeah. They released that a couple weeks ago. They started. They're trying to get people to understand to look at the home as more of an investment rather than just a shelter. And they're kind of giving, it's a sales strategy. I think it's an interesting one. I like it. I mean, hey, look, anything that you can do to help drum up business, but the short term outlook, as to what Brian said last week, both on this show and in person during his little seminar that he was doing, the next 6 to 12 months looks a little rocky in the economy, and so you can't expect the demand side to pull us out of this trough right now, right? You just can't. In fact, you can probably expect it to get worse, not better. And if you're
words of wisdom,
these numbers are maybe the best numbers you're going to see in the next 6 months. If you're a producer, right? I mean, that's your mindset that it needs to be. These may be the best numbers we see in the next 6 months. But Matt,
I think Greg and I agree on something.
To your point, Matt, is one of the things is housing. It's affordability is the issue, and I mean the reality is like affordability is at an all-time low. Hey, Rockin' Rob,
what's up?
Rockin' Rob.
Robin, what's up, buddy?
Rockin' Robin. Yeah, there you go.
Hey, Matt, why don't you introduce Rob?
I'm sorry I'm late, boys. You guys could tell that this thing's been ringing off the hook since 7 a.m. So
Yeah.
it's not every day you get to go on a show after a 32-day out of 34 down break. So
Yeah, no kidding.
it's a little crazy, but how's it going, boys?
It's good. It's good. So Rob, what's the sense of the customers you're doing business with for the last 30 days?
Know who Rob is.
Yeah, let me give Rob a little introduction.
Come on, Ash.
He's just like some dude we found on the street, or what? Come on.
Yeah, no, this guy doesn't.
No, that was me, the diversity hire.
This guy's a YouTube guy that we just found.
You love that. Go ahead.
Especially Chicago. It's perfect.
Yeah, Rob Cross works for FC Stone in Chicago. He came up through the pits in the old days of the open outcry when the Chicago Merc was in a different building and guys used to scream their orders all over the place. And Rob was a runner,
when stealing was legal.
And Rob was a runner, and then he became a trader. And now he handles Hampton's account and many other people's account.
Now the computer steals your money and you don't even realize it.
Exactly.
You always make it too easy nowadays.
Dude, so sorry to interrupt. So what were you guys doing? What's going on? I like this. I never talked on where I could see myself, so it's kind of weird. I wish I could black out my screen, but that's all right.
You look kind of blurry to me, so it's I don't know. Maybe that's
Well, I mean, me. Greg, you should be used to that. It's usually what your internet connection looks like.
Yeah, but I got the upgrade now. I'm upgraded. No, Rob, we were talking about the opportunity today of buying September, selling November for $50, $55, $60, and buying undervalued 2x6 or 2x10 or even 2x4 tallies, putting it on the shelf and looking maybe to hey, roll it for another $50 or $60 in January, and that's going to be some nice money for you in Q1. And given that the guy that you can EFP with is doing it above the current market, you can book a short-term futures profit as a bonus. So, I mean,
I think that's excellent. And, really considering where the entire lumber industry thought these prices would be at this time, like, I hate to use this on the show, but I truly feel like that's a no-brainer. When you're in an opportunity, like how often in our lives of all five of us that's been in this business, I had my 27th anniversary last week. So 27 years. Just like you said, the September, November. I mean, you're looking at the last 3 years, and you can't really go beyond into the old contract. Like I do it just for a guide, but it's totally two different markets. And, looking at that stuff, you're picking up $40, $50 better on those first and third deferred spreads than we've seen in many years. And that at this point, what I think the market get afraid of, or guide traders, have kind of lost sight. Me and Matt talk about this every day, where I feel like, especially this younger generation coming up, these guys just, they're yes men. They just want to do, they don't take any risk. Don't take any chances. They literally want to do, if they can't back to back it, or it's not a guaranteed layup, they won't go for it. And you see this kind of action when that happens. But there's a certain time in your life, you literally, and, pardon my language, you got to grow a pair and jump on the line and take a shot at this thing.
Rob, are you talking about the there and they traders?
Oh yeah, of course. Not every day. Look at this, where you get 32-day break, and instead of sitting there, oh man, if I buy it at 520 and it goes to 480, oh shit. You know what? If you buy it at 520 and it goes to 480, you buy more. That's it. We talk about this. I'm a person to ask. So when I talk to the mills and stuff, I point blank ask them. I'm like, what's going on? And, like I always tell Matt, when they talk to me, or probably, my competitors or other guys, they lie to us, like,
what
in the way of,
whoa. They lie to you?
Oh, just a
what
little.
What kind of business are we in?
But
for $5 or for $10? I just want to know.
At least for 50, but you can't, like I always say, you can't lie to your doctor, man. Like that's the one guy. And that's how I feel. Like I personally don't give a shit what people think. I really don't. I just want to know.
I like him more and more, Matt. Just after that, I mean, how can
you like
that?
him? Yeah, I kind of like him too.
You know, but other than that, just in terms of this market, you know, this is where I'm starting. And this is just between us and the rest of the world who's listening. You know, the funny part is when we were up in the highs. You know, think about every rally we had this year, right? Every single rally, none of it was from bona fide demand. It was all from some side shit of President Trump, side shit of Carney, and all this other stuff that's been going on, but none of it equal to, you know, digging more holes for more houses, and it was all panic. So, you know, what really alarms me the most, and I feel like we talked about this last time, but literally disappoints me the most is, okay, for instance, we're sitting there after the you know, after the previous expiration in July, and you know, September's sitting up there, and Matt will tell you, I literally went from down the line talking to guys, and I don't know if it's the mills got them twisted. I'm saying the general customers and the mills themselves are twisted. You know, so they don't hedge, right? It's not a secret. You know, Canfor is literally our only probably real hedger. You get the rest of them; they do very small, insignificant amount where you have, you know, singular customers that do far greater volume than mills. So that's number one problem. Number two problem, when they do it, it's always as a last ditch effort instead of a forethought. Like, man, you know, if it gets up here, we know this is way more than we're getting in the streets. It's way more than the cost of production. Let's sell 1 day's production. You don't have to do months of it, or you don't have to put hundreds of trades. Do 1 single day of production, and you won't see $160 slide, because obviously, you know, it wouldn't go as high, but it wouldn't go as low. You know, it really wouldn't. And now it's sitting here, you know, at this point, like Matt said, as soon as you go, as soon as the market drops like this, even though we know its values, guys put away the PO books and say, oh, and then they'll call me. We're super oversold. It'll rally $20 without even batting an eye, and guys are like, oh man, shoulda, woulda, coulda. You know, so that's what I'm saying. Like on this type, I know it's risky. I know it's scary. I know most of the lumber dudes are probably shitting bricks out there. But the fact of the matter is, you gotta like take that away, and you gotta look at it. I mean, because think about this.
You know, normally, Rob, I mean, my feeling always is like, whenever you're in a situation in the market, look at what's the hardest thing to do. And I'll remember, this was a perfect example, is when we were up in the 690s, we were a $50, $60 premium to cash and $70 to US West. And, you know, but there was people there that were like thinking the market was going to go to 800, and, you know, you're short at a lower number, and you've got a margin call, and you got a guy at the head office going like, hey, what are you doing? And you got to justify every day like what it is. And I was like going, you know, hey, I sold 690, I sold 695, and I'm like, oh, I got to save some bullets for 720, 725, right? That never got there. That's, to your point, is you buy 520 today, hey, buy 500, buy 480. If you do that, because it's really hard to do today. It's so hard to do it. That's how you
know what the math is,
and
Greg?
Not to interrupt you, Matt. I just don't want to lose. You know, I'm a Polak, so I lose my train of thought quickly. You know, at the same token, you know, even if say you're dead ass wrong, compared to where we were this year, because we all know, okay, we're finally on the cusp of where interest rates are going to be better. I know that doesn't equate to magic business and housing, but dude, I could tell you we are so damn underbuilt, and it's not been like, oh, we're 1 year underbuilt. We're multiple year. So even if you're early, I don't think you get hurt that bad. I really feel like that's something, you know, I'm not hearing nothing or even saying nothing, but it's when
Ash, do you want to address the overbuilt part of that?
Pardon?
Ashley, no, sorry. Greg has been telling me we're underbuilt since I started in 1992 and or 93.
Think about it.
And I'm like,
years. So I'm here since what, 1996, and I probably been 2003.
Yeah, and I'm like, hey, Greg, yes, we're gonna be underbuilt until I retire, and then for 100 years after that. And I mean, but one of the interesting things, we're talking about spruce numbers. So I'll also say to Charles here, all right, like pine and OSB rolled over in February, March of this year, and I mean, if we're buying spruce at these numbers, like, I mean, is pine an investment too? Because that's the scary thing. Pine is really kind of the canary in the coal mine, because of its production and its amount of market share, and it can't get off the mat.
It hasn't been able to. I mean, yeah, I'm here. I'm just listening. Sorry. I had you on mute.
Yeah.
No, I mean, it has been the canary in the coal mine, and I think we've had those discussions each time that we've seen this thing break, right? Pine was the alarm in the cash market, right? Obviously, the futures contract doesn't get any volume, not very much open interest. But I mean, in the cash market, it told everything, because as soon as those ancillary markets that we sell into, as soon as spruce becomes more affordable, and I use air quotes, they stop buying pine. Because then they're going to go in and they're going to step in, they're going to buy cars, and it's going to be 3 or 4 weeks. So then pine is out of that market for, call it, 5 to 6 weeks, unless they had pending orders, right? So then that volume has to go somewhere down here, and it doesn't go anywhere because there's too much wood. And the fact is that from one mill to the next, you might pass one every 130 miles if you drive through the state of Georgia, right? Used to be that way in the state of South Carolina, but not anymore after we curtailed 800 million foot. But something, I guess, to combat or compound on the fact that it's a canary in the coal mine is one thing that I mentioned earlier. If you look at the poignancy of what happened each time and the time spread between when pine broke and when spruce reacted, the expediency for spruce to get back down to a level to alleviate those buildups is absolutely mind-blowing.
Yeah.
So once again, think about where we were, 690, right? What is that, $170? How long did that take?
30
6
days?
weeks.
Yeah.
About a month. Yeah, because I mean, I think I was buying back some of those 690s about 2 weeks ago.
$100 ago.
And
$100 ago.
I think I did them at the end of July and early August, right? Like on the sell side. Yep. And so, yeah, it's been a month. We've dropped $170 1,000 in the front contract, which I made the remark today.
To Greg's point, though, when things like this happen, everybody in the lumber business just throws their pen up in the air and says, well, shit, I don't know what to do. But you can't react that way.
Did anyone here expect a $170 sell-off? Did anyone honestly?
No, I said 605. Greg said 585. I think you were the outlier at 660. Beamer.
I just figured somebody would cry uncle by now, and then we would get a stabilization, but that hasn't happened. So what's happened is we sold off an extra $50 or $70 1,000 from where we were heading already. And so there's the surprise, the shock and awe factor. And that's the question I want to give to Rob. Rob, why did that happen?
Well, so first of all, remember in the summer, the lumber, when there's no other news, it's really a good super seasonal market. It is. Like I called it like months in advance. I said the high of the whole summer is either going to come on the last day of July or the first day of August. And I remember after it started to break, and it was like maybe first $30, $40. And I answered the phone. It was from one of the mills, and didn't identify who he was. Like, how did you know? And I'm like, I'm not a secret. It's literally happens every year. You could set your clock to it. And, it may be off by a couple of weeks or whatever. Okay, so, I felt like the cheapest guy in the game, and it was in the cheapest guy in town in terms of where I thought lumber could go. Worst case scenario, and I still even missed it by $30, $40 just because, it's once you start getting this cascade, and also I think it got compounded too in the fact that it was holiday, right? So pre-Labor Day, when we were still kind of in decent numbers, we just probably converged with cash pre-Labor Day. There was an ample amount of bids, but every day you got closer and closer to the holidays. No one wants to get stuck holding the bag. And it also, lumber guys are funny in the terms of, say we're working orders. I'm just going to use crazy prices. Say we're at 580, we're working prices at 570. We get to 572, but it takes a day or two. The next day they're looking at 560. Then the next day they're looking at 550. It's like traders never stick to their original numbers. But I do think like in cases like this where it's beyond anybody's expectation, you got to literally nut up and go for it. Like, I mean, if you were 10 with 5 or putting inventory on the ground at say 550 or 542, which was literally our worst case scenario, and clearly that didn't hold up. If you were comfortable with that, hell, if you were comfortable not selling the market at 620, you should be giggling where it's at now. You know what I mean? Like literally. And how get those big precipitous drops like that. It's just really like, and it's more amplified in lumber specifically, but that's just the nature of futures trading. You know, lumber is notorious for always going way higher than it deserves to be and way cheper than it deserves to be.
And you know, we're really grateful for that, because, you know, it's those, like, you know, it's those outliers that provide, you know, really opportunity for guys like, you know, Matt, Charles, and myself, is that the things that don't make sense, you know, I love that. Yeah. But I did do something today. I was talking to somebody. I thought it was interesting, because he said, yeah, last year the low in July was $418, right? And I said, well, okay, so I wondered, that was when the before the last year's increase in duties and whatnot. I just said, well, I wonder what that equals today. What does that equal?
Before expiration too, by the way. So it didn't really deserve to be there. It was just like this, like $20 for the.
I'm just saying, is to make the comparison today, that same 418 is equivalent for West Fraser of 463, for everybody else 478, and for Canfor 510. That's what that's equivalent to, just as an FYI. And if you remember correctly, that was the July low, and, you know, the curtailments didn't really start coming until September. So, you know, we're not even to that number yet. And so that's why, you know, when you look at it, you have to be prepared for $485. You have to be prepared $450. I mean, $520 today may be great, which is why my whole thing is, hey, you buy stuff and you sell Nova and you sell Jan. Right? Close your eyes and let the money machines run.
And also, if you're a risk-on kind of guy, there's very seldom in the market where I'll say, you know, it's not cool. Like, you should always have some protection somewhere. When you have this kind of these kind of value levels, you know, you're almost in a spot too where you could do, Greg, like a 2-to-1, like buy 2, sell 1 Jan, or buy 2, sell 1 Nova, because at the same token, one little, you know, someone farts in the industry, the thing's going to go up $20, $30 before anyone even reacts. You know?
Well, if you think about it, like there's two big retailers out there, and Greg, I'm going to steal your idea and make it mine here. And you got
to go like this, Ash. You got to go
because
like
I do listen to you when you know, one of the great things about sitting next to people, you listen to them talk, and I heard him talking this morning, like, hey, there's 2 big national customers in the market right now that are hidden under a rock and aren't giving out POs. And if those 2 step in and decide they want to lay in 3 or 4 weeks of inventory, the market moves up $100.
Yeah.
If they just start replacing what they're selling, the market firms. If they want to add a week, it's $25 or $30. To your point, Ash. Yeah, 3 weeks. I don't know that it would take them a month to buy 3 weeks worth.
No.
Right. Yeah, Charles, is that the same on the Southern Pine side of the market too, as far as those big guys buying right now?
Well, I think it's a little bit different because our supply chain is different. Same thing we've always talked about, right? I mean, they're going to take contracts, and I mean, they don't have to take it to a DC and touch it again and then redeliver it somewhere, right? I mean,
right.
Then go mill direct on mixed trucks or what have you, you know, solidified tallies. So I mean, it's a little bit of a different world, but you know, I don't see that as a necessity, because a lot of those big retailers, I mean, their prices, I mean, their margins on some of the stuff they're selling, even at levels that I would imagine their average cost inventory are still pretty damn good, right? So from a shareholder perspective, why would you outlay the capital when you don't need to? Because there's no confidence. There's no consumer confidence. There's nothing that tells you, holy shit, it's a value, right? But what am I going to do with it?
Yeah,
that's the problem.
I'm gonna put this on everybody's calendar, something to like look for down the road. You know, in the next, you know, in probably starting like in a month and 60 days, contracts for home centers for 2026 will be all in the pipeline. And you got a lot of competing things that are going to be going on. Like I said, you've got 40 or 50% less European production coming on here. You've got the whole idea of how many DCs are going to switch from whitewoods to yellow pine, right? What's that dynamic going to look like? How's that shift going to happen? And then you've got the idea of, like, I know that as a Canadian producer, we're going to say, hey, our contracts, here's a floor price. I mean, we're going to have a floor price, which, to the extent that, we do that, we're not the only one that does that. Other people do that. And when you do that, what happens? Okay, so I have to produce, right, to fill that. And then I have to sell my fall down because I'm putting a floor price in for my premium and my select lumber. I'm not putting it for my number 2. So I end up giving that away at like crazy cheap prices.
Right. I have a couple of comments here. One is going back to Greg talking about 450 being a possibility. I did some quick math, and that's 221 FOB Prince George with the average of 35% duty added in. That's, oof.
Yeah.
Don't even want to think about that kind of a number.
No, but I think you have to, if you're a producer, you have to figure that if nothing changes, that's what's going to happen. That's where we are.
Wasn't Russ telling us that the average cost of production was somewhere between 450 and 500? So you're looking at like 30,000 a car loss.
That always changes.
Yeah, but the market's the market. I mean, I think we've proven nobody cares what the cost of production is.
Yeah. No, but I mean, I care.
They don't care. They don't care until they care, right? I mean,
yeah.
The mill can run forever. That's an important number to know, but I will tell you this, just from dealing with this for 30 years, that number is always ever changing. When we went to 1,700, cost of production was like 650 at that time, right? And then we drop. It's always like that. That needle always moves. But the premise is exactly correct. Like you think to yourself, especially with the Southern Yellow Pine, because these mills are all diversified in in all these different avenues. And the fact of the matter is, none of it's been good. So I think, Matt's point, I wouldn't sit there and focus on that, but it's good to be definitely aware of it, And I wanted to say something funny to Greg. Greg, we used to talk about floor pricing when I come from, because obviously I've been in lumber for almost my whole life, but like in cattle and stuff where I originally came from. And the floor guys, it was like always a big joke amongst us. Whenever like a company or a business like would come in and tell us floor pricing, we would always laugh.
Floor's the ceiling.
Price every time.
Floor's the ceiling. Floor's the ceiling. Absolutely.
I haven't heard that until like
that's where hey, the floor price says this is where you can have all the lumber you want.
Yes, exactly.
That's the new high.
Like that's why I like talking to you guys, because you kind of remind me of shit that I forgot about. And that's exactly it.
That's funny. I've got the second comment I was going to make, Greg.
What's that, Matt?
Real quick, the second comment I was going to make about your contract discussion. So the mills are going to go into this round of yearly negotiations with the idea of floor pricing, and I think that the customers are going to come into this round of negotiations with reductions of their commitments,
right?
And I think that they're going to ask for more flexibility, right? Not less flexibility going into 2026 because of what's happened in 2025. So, like a good example would be you guys getting stuck with finger joints on the ground in Dallas for 3 months, right? Think about how many finger joints are sold on contracts.
We ended up adding to our position too, because it's like if you got to be in to win.
Go ahead, Matt.
Right, but I mean, you're at the mercy of the contracts, right? So it's like when you're getting front run by contracts, and then there's no room in the open cash market for you to squeeze a few cars worth in here or there. It locks all of us out. So what's going to happen in 2026 is the people that have those contracts probably going to be asked to reduce them, right? So that the customers can end up taking more advantage of you or me in the spot cash market on fill-in trucks or prompt rail cars. It's to their advantage. I haven't had any conversations with any of my customers yet about contracts for 2026, but I'm telling you, this is my thought process before I even make those phone calls next month or even later this month. I'm pretty sure I'm going to get pushback on contracts for 2026. I'd be shocked if they all go, hey, we want to do as much or more.
Now, and the positive on that is that the more lumber that trades freely, in a price discovery environment, the better off we are, right? The problem with all these contracts is there's no price discovery, and it skews the market and it makes it less efficient.
And this has been going on for a long time, Greg, since that really started to pick up, since the mills started selling customers more directly, the prices have been way more volatile. I'm saying on the extremes, maybe day to day they're a little, smoother, and that's exactly. I think guys do feel some type of way that they, I don't want to say boxed out is not necessarily the right word, but you know what I mean? Around like thinking that, like you got to have more excess. And, we had a lot less problems when you had a good secondary market where everybody was taking shots on the market, both up and down. A lot of that has gone away big time. And I watched it steadily decline for the longest. And that to me is one of the biggest missing elements of this market. The customers, they're always going to wait. It's either going to 1,000 or 0. So they're always going to wait. Where you had that little thin layer of, traders that would take the ball and try and run with it a little bit. And that would kind of create the market and get other guys, involved or at the very least looking at it. And now it's like, okay, we all sit and, oh, he jumped. Okay, we'll finally jump, and, maybe that works and maybe that keeps you employed, but there's no fun in that at all,
Yeah.
So real quick, we've been talking about the hedging side of the market. What about the forward market? So you're also going to have customers come in and want people to lock into forward business, for Q4, Q1, and as always, everybody wants to buy at today's price minus, right? So is there going to be any forward pricing done? What's that going to look like?
Not at Sitka USA. Because we're, depending on the item, we're $100 to $150 over today's price for Q1. I quoted some stuff this morning and I looked at the price. I go, really? I didn't even need to go as high as I needed to go because I knew the price I was putting on it was $50 below where I should be, but it was still $100 over the market.
So we're going back to what we originally said. You're getting into these cooler months, so to speak, in the area that there's not going to be much forward pricing. It's going to be more buy and hold, putting it on the ground. And if you have been forward pricing, you're just getting skewered because you're rolling longs at a huge loss the whole time and unable to buy at the real cash market.
Hey, Rob. So we're in a bull market technically, right? Have been for a couple of years with the back months leading the front months.
I was just going to say that as defined by the book.
What would happen if we rolled into
Matt, I always think it's the opposite. When you're in a carry market like this, that's a bear market because it's saying prices are going to be higher in the future. And when front month is premium and cash is premium, that's when it's a bear market because
I said that backwards. Greg is exactly
So what
right.
would happen if we switched the charts from where the back months are big premiums to where they go to flat or to a discount? I mean, what would that look like? Are we even in position to move the charts around? And we're going to have less demand.
A $200 rally will do it.
Minimum. But Greg, you know what? That's exactly true. Like that seems extreme, but the fact of the matter is, even when we had $100 and $120 bounces, we still kept that carry in check. And it's a forward seller's dream if we ever really did get in a bull market where the front is leading the backs. Because what happens every time is what you see happen every single contract. It's so front loaded, and with President Trump winning, there was always this belief that, okay, housing, everything's going to be better the next month. So, and then what happens, you get there. And one of my greatest secrets is, you really just got to determine where guys are willing to take delivery when you start getting into just a couple of weeks before no limits, because that shows you a high probability of where that market's going to go to. And this is, I think, today's trader hasn't experienced a real bull market since the old contract. We haven't had one. If you look, we've been carried this entire time. And, we had a couple blips on the screen every now and then where the spread got close. Never quite closed over and stayed over. But the day you see that one, and what's funny is sometimes September, November historically is the one that would do that, right?
So
I just had somebody ping in, they heard they're listening to the show and they wanted the detail on the Eastern mill that's curtailing. And so I think, they'll have come on into the back room and we'll let you know.
So I said
the after show.
J-Dog brings up a good
champagne room.
J-Dog brings up a good point here. He said technically we're in a bear market, and he said we're below all the major moving averages, and all the funds are adding to the short side.
That's correct.
So the chart says bear for now.
Yeah, it is. It's no doubt. especially when you have a break like this. Anyone who's like, oh, that's bullish. I mean, that seems kind of silly, you know.
Yeah, when you're making new multi-year lows, it's hard to say you're anything other than a bear market. True.
That's true. That's true. Yeah.
All right, this is awesome. Thanks for coming on, Rob. That's great. I mean, good stuff. I'd always love to, get another Chicago guy in here. Right?
Yeah, Rob, that's awesome.
Business, no, this is not. This ain't long enough, boys. Like, I really want to dive into the stuff of this market. It would be nice to be on here when we don't have headline breaking news. The days we're going on here every day.
But hey, Rob, this is the headline breaking news. Is what happens on this pod. This is number one podcast to the lumber and forest products industry. So this is where the news happens, right? I mean,
and I will tell you this, guys, I really do love listening to the show. Like for me, someone who's been in lumber since I've been 17 years old, the last damn thing I want to talk about is lumber. But I do enjoy it, and I feel like it's serious and lighthearted. So I do get something from it all the time, and I hope, and I would be totally honored if you guys ever have me back.
Make sure you listen to our disclaimer. It's like you need to. This is purely for entertainment and educational. You need to consult your individual financial advisor for situations that are appropriate.
And Rob, you'll have to talk to Charles about cattle trading.
Only. So that's the same on my risk disclosure. So we're all good.
Awesome, guys. Hey, thank you, Rob. Take care, man.
Bye, boys.
See you guys.